Well, welcome back from lunch. We are going to jump right into our next session. Michael Schmidtke is a senior auditor on our team with over 22 years of experience. Michael earned his accounting degree from the University of Mary, earned his CPA license, and has extensive experience in audits of state agencies, working with North Dakota Annual Comprehensive Financial Report, the statewide single audit, and audits of political subdivisions. Welcome, Michael.
Thank you, Emily, for that kind introduction. Welcome everybody to the afternoon session of our Audit Summit, and thank you for attending. I'd like to say this might be the most difficult session today just because it's right after lunch. You guys may get a little drowsy, and it is the single audit topic, so hopefully I can keep your attention today. As noted, this session will be all about the single audit and federal program compliance. As Emily noted, I've been working on the single audit for many years with experience at state agencies and local governments. And hopefully today, as I go through this with you, I can share some of what I've learned over my years and also try to make your job a little bit easier and help you prepare for a single audit if one is in your future. So that gets us to today's topics. First, I want to start with the single audit requirements. How do you know if you need a single audit? And also give you a little bit of an overview on the CFA. Uniform guidance. I want to go over some of the subparts with you and point out some specific areas that would be of particular interest for grant compliance. The next section I want to talk about is grant compliance specific to the grants that you receive. This will help you ensure compliance with your programs. The American Rescue Plan. I want to go over some highlights of ARPA and also the effects it could have on your audits and give you a little bit of an overview of what your audit could look like. And lastly, the Federal Emergency Management Agency. I'm going to talk a little bit to you about a grant that you can get from them and give you some pointers as far as how things go for your CFA. So as we all know, with federal monies, there's always strings attached. And the single audit might just be one of those strings. Listed here today, I gave you a definition as defined by the U.S. Department of Health and Human Services about what a single audit is. And really, in short terms, a single audit is an audit of your federal expenditures in a year. Now, if you notice, I have expend $750,000 in a year underlined. That is because the single audit is based on federal expenditures. Let me give you a little example of where the single audit may be required and where it may not be required. If you are a county and you receive $1 million grant, so you got $1 million in federal revenue, but you only spent $500,000 that year of that award, you would not be subject to the single audit requirements. Now, if you're a county and you received $1 million in a year and you expend $800,000 of that award in a year, you will be subject to the single audit. So throughout this presentation, you're going to hear me reference uniform guidance. And in this slide, I did put a CFR part 200-503 in there for you. And that part does describe the $750,000 threshold requirement that requires you to have a single audit. So in most instances, federal awards are received from a couple of places by local governments. They're either going to receive that money directly from the federal government, or that money is going to be passed through from a state agency or another local government. Which brings me to the schedule of expenditures of federal awards, the CFA. So you might hear your auditor talk about the CFA a lot. It almost sounds like something they're born with, I don't know, but the CFA really is important to your auditor because that is the basis for how they determine if you are going to be required to have a single audit. So today, I want to go over some things that are included on your CFA, talk a little bit about those areas, and then I'll also show you an example of a CFA and kind of talk you through the different parts of that. So first off, the CFA, it lists your federal awards expended by the federal grantor who gave you the money. It also includes an assistance listing number for each federal award received. Now that assistance listing number, that is a unique identifier that's assigned by the awarding agency. The ALN used to be called the CFDA number, Catalog of Federal Domestic Assistance, but that changed a little bit a year or two ago. So you might still hear people refer to the ALN as a CFJ number. So just be aware that they are the same thing. If you receive your funds from another state agency, there may also be a pass-through entity identifying number associated with those funds. That is also included on your CFA. The CFA will also include your total federal expenditures and expenditures to subrecipients. And again, if you exceed $750,000 at the bottom for a total on your CFA, you will be required to have a single audit. So when we do a single audit for you, in your audit report, this will typically be included as supplementary information. And along with your CFA, there are some required note disclosures. Now, don't be too concerned here. Those note disclosures aren't anywhere as extensive as your normal financial statement audit, but there are a couple required. You would probably see note disclosures related to basis of accounting, significant accounting policies, and indirect costs. Those would be your three typical disclosures on your CFA. Now, we have had questions from clients where they notice that the expenditures listed on the CFA don't necessarily agree or tie to their general ledger. And there are some good reasons for that, because the CFA can have things on it that aren't actual expenditures. So I'm going to go through some of those different things with you here, and also try to give you some guidance on when you would actually include those on your CFA. So far, we've been talking about grant expenditures. If you have a grant expenditure, that's put on your CFA when the expense occurs. If you make a payment to a subrecipient, that's going to go on the CFA in the year that the disbursement was made. Now, some things that might cause your CFA not to reconcile directly to your general ledger is if you get loans or guarantees, those go on your CFA, and you put those on your CFA when the proceeds are used. You may also receive donated property. That goes on the CFA when it's received. Commodities is another item that can go on the CFA, and you would put those on when they are distributed or consumed. And lastly, program income may also go on the CFA, and that is also put on when received or used. So here's an example for you today of the CFA. The first column you'll note is the assistance listing number, and there is your unique identifier for each different grant that this entity has received. Also, you'll notice the grantor. So here we have the U.S. Department of Agriculture, and we have the U.S. Department of Education. Now, you'll note by looking at this, they're just a little bit different. So the amount that came from the Department of Agriculture, that was actually passed through DPI, or the Department of Public Instruction. As where the Department of Education, that was direct assistance. And as I had noted earlier, what does that affect? Well, you'll notice in the next column, the pass-through grantor's number. The funds that were passed through the state agency, they have a pass-through grantor number. And if it was direct assistance, they don't, which is indicated by not applicable. You can also see in the next column, we have total expenditures, and then we have a column for expenditures to subrecipients. Now, I want to draw attention to the payment to subrecipients, because there's been confusion about how these numbers work on the CFA. So you will notice for the Indian Education Grant, the total expenditures listed are approximately $138,000. And to be clear, the $138,000 are the total expenditures for that grant. Of that $138,000, $5,000 was paid to subrecipients. So I just wanted to make that distinction for you on the CFA. Also at the bottom, you'll note there's a little subnote down there that says non-cash assistance, which will take you back up to the National School Lunch Program, commodities. Right there is your non-cash assistance that we had mentioned in the previous slide. In this form here, this is actually food that's given by the Department of Public Instruction to probably a school. And the last thing I'd like to mention to you about this CFA example, you will notice under the Department of Agriculture heading, we have the child nutrition cluster. So the federal, the feds, have determined there are certain programs that are going to be considered clusters. Child nutrition cluster is one of those. And what is a cluster? So a cluster is really a group of programs with similar program requirements. And those get reported on your CFA as a cluster. So CFA preparation. One of the first things your auditor is going to do when they come in is they're going to review your policies and procedures to prepare your CIFA. And this is very important. In looking at those policies and procedures, they're trying to gain assurance on what you did in preparing it so they can place reliance on those procedures. And it does have an effect on the audit, because if they can place a high level of reliance on your procedures, that may eventually reduce testing as you're going through your single audit. Another part of the CIFA preparation is ensuring that your CIFA reconciles to the general ledger. So how do you do that? One of the ways that makes this easier is if when you're coding your expenditures for your federal grants, you keep that coding separate. So it's easy for you to go into your general ledger and see what your revenues are for that grant, see what your expenditures are for that grant, and it will make the CIFA preparation much easier to do. And the last bullet there is maintaining your support for the audit. So when you're reconciling your CIFA, keep that support, because when your auditors come in, they're going to try to do the same thing. They're going to try and make sure that your CIFA reconciles to your ledger. And remember, we have to take into account those other things we talked about earlier that aren't necessarily expenditures, but it is something that they will do. So make sure that you do that. Another thing I've seen with the CIFA and its preparation is making sure the ALN numbers match the name of the grant. I've seen from time to time where those don't match. You can look up those ALN numbers and it'll give you the names of the grant. So double check those. Now, there's a little bit of a misconception, I guess I would say, out there from what I have heard from different clients about what programs the auditors are going to test when they do a single audit. Now, I want to say a lot of people think that it's going to be the large programs that get audited. In reality, that's not true. We select our programs based on risk. So I'm going to go through a little work through here, I guess, to tell you how we select our programs for testing. The first thing we'll do when we come into your office to do the single audit is we'll ask for your CIFA. We'll take that CIFA and we're going to sort it. We're going to sort it between your large programs and your smaller programs. And the uniform guidance basically describes the larger programs as type A programs and the smaller programs as type B programs. And they set out some different thresholds of where those would be. Now, for our clients, the majority of you, a type A program is going to be $750,000 or more. And then under that, you're going to have your type B programs. So once we've identified your type A and type B programs, we start looking at risks. So we may ask you some different questions about your programs. Things that we consider when identifying or determining risk for your programs would be, how long has the client used this grant or had this grant? Has there been turnover in key personnel? Did the prior audit include findings? Have they had a prior single audit? Did that have findings? Those things are used to help determine risk. And once we have that information figured out, then we will select the programs. And I would just like to say, it's always a great idea to develop best practices and document your internal controls and policies for all your grants, not just the large ones. So what are the requirements and where do we find them? So the first part of guidance that I want to talk to you today about is the uniform guidance. And to be clear, the uniform guidance is really, it's an overarching set of laws and regulations and rules that govern federal awards. So it's very general. It's not specific to individual grants. The uniform guidance is codified in 2 CFR Part 200. So as you look through these slides, you'll see different references to CFRs, and you're going to see that Part 200 show up almost all the time. On this slide, CFR stands for Code of Federal Regulations. Now today, I plan on going over the first or the last 3 subparts in detail. The first 3 I'm going to just visit with you briefly about. If you're new to the single audit or federal awards, subpart A would be a good area for you to look at, because that does give some good acronyms and definitions that will help you interpret what you're going to read as you go through. Uniform guidance really does give general regulations for applying for, maintaining, and reporting on your federal awards. Now, something I just wanted to bring up to the group, because I know we got a lot of people that aren't or that were not in that training, but we did a little presentation out in Dickinson at the Auditors Treasurers Conference, and I did ask a question to the audience that asked, who here has heard of uniform guidance? And I didn't get a lot of hands. So hopefully this is very relevant information to you and gives you a good resource on what you can look at to help you with your federal awards. So Subpart D, the post-federal award requirements. So these really are the general requirements during the award period. Now you can see here, there's a lot of different breakout items for Subpart D. I'm going to go over a couple of them with you and give you some additional information. So the first section, financial and program management, this section is important because it includes information on developing and maintaining internal controls. And you're going to kind of hear me say this throughout the presentation today, but that is the area that causes our clients some issues. There's also information on property and equipment purchases. And now I've bolded a couple items here because these are also a couple of areas that cause some difficulties for our clients. So the procurement standards, if you're purchasing larger purchases, there definitely are procurement standards in the federal regulations that you're going to need to follow. And on a later slide, I'm going to give you the actual references to those standards. Subrecipients and subrecipient monitoring. So what is a subrecipient? Kind of a basic definition, I guess, is if you're the pass-through entity, you're giving that money to a lower tier entity to run the program. And now if you do that, you are responsible to monitor the spending of that program. And that monitoring part, that's caused people quite a bit of, I guess, angst and just trying to understand what those different requirements are because there's quite a few. So in some later slides, I'm going to try and give some detail there too that will help you go through that area. And as always, if you're getting into these different areas, subrecipient monitoring or procurement with your federal grants, and you're not quite sure, remember, you can always reach out to your auditors to ask them questions. They would be more than willing to help you do that, or at least try and point you in the right direction, or give you some, pointers on different guidance that you can review and follow. The last bullet on this slide, I wanted to talk about this just a little bit too, because it might be a little confusing just as it reads. Collections of amounts due. So this really only is applicable if your single audit has findings or question costs. So what happens to our single audit when it's completed? What we'll do, we complete the single audit, then it gets filed in a clearinghouse where the feds can have access to that to review the findings. And eventually, if you do have findings in your single audit, they will probably contact you to talk about those findings. And what can happen is if they truly determine that a cost was unallowable, they can ask for that money back. But I'm here to tell you, in my 22 plus years of experience doing single audits, I think I've only seen that happen a couple times. So it's pretty rare an occurrence, but I just wanted to point that out that it is a possibility. Here I included a sheet for you that shows a little bit of a breakdown between the differences of a subrecipient and a vendor. So these are not all-inclusive characteristics, but they do kind of point you in a certain direction. So if you're dealing with a subrecipient, they are going to differ from a vendor, or it could say contractor as well. But a subrecipient is typically going to have the responsibility for programmatic decision making. And what do I mean by that? Well, if you pass money to a subrecipient, one of the examples I can think of is if that entity has to determine eligibility, that probably is pointing them into a subrecipient type category. Your subrecipients are also going to get the funding to carry out the program for a public purpose, and they're going to have unique expertise in the performance of that work. Now, when you compare that to a vendor is going to be much simpler than the characteristics of a subrecipient. So the vendor is going to provide whatever they're doing as a routine service. It's going to be part of their normal business operations. More than likely, they're going to operate in a competitive environment, and they're going to provide these goods and services to many different purchasers. So there you can kind of see the distinction or the differences between a subrecipient and a vendor. And I wanted to point out, an entity doesn't have to meet all the characteristics of a subrecipient or all the characteristics of a vendor to be classified as one or the other. You're really looking for which one do they fit more closely to. And again, if you do have questions on this, because this is an important thing, if you misclassify somebody as a vendor and they're a subrecipient, then you can potentially miss some other requirements that your auditor is going to be expecting when they come in and review this. So don't hesitate, again, to contact your auditor. Subpart E, the cost principles. So these are really the general and basic guidelines for cost charged to your programs. The costs need to be necessary and reasonable to operate your program. So a question you can ask, without purchasing this item, I cannot run my program. And if you have that type of a question and you would answer, yeah, I can't, more than likely you are definitely dealing with an allowable cost. So it's just kind of a little test you can do. The costs to be allowable, they must be consistent with your policies and procedures. They need to be in accordance with GAAP, and they need to be adequately documented. So this is key. Your auditors are always looking for documentation. So you need to maintain documentation to make sure that you can prove compliance with your federal program. And here's the other thing. If you don't maintain that documentation, your auditors are going to ask for it. It's going to be way more difficult to get through your single audit. So if you maintain that documentation initially, your single audit will go much more smoothly. Subpart E also gives some information on direct and indirect costs. And these are usually specific to your entity or your program. It also gives some different special considerations to states, local governments, and Indian tribes, as well as institutions of higher education. Now, the last bullet here is it is a good one. It's a very good one for you to take a look at. This gives a very long list of allowable costs that you may be considering for your grants. I kind of took a look through this list, and there's a few things in here that kind of stood out to me. One of them was personnel costs. So as you would know with most of your federal grants, typically a good amount of expenditures related to your federal programs are going to be for personnel costs. So in this section, it does talk about what controls and what documentation is required if you're going to be incurring payroll costs with your federal programs. It also has some different topical areas such as travel costs, depreciation with federal awards. But the one thing I noticed, and this is just good to note, and probably everybody in this class already had that idea for the most part, but unallowed costs. The one cost that they mention that's always unallowed is alcohol with federal awards, so just keep that in mind. Subpart F. So this is the auditor's favorite part. This is what gets us all excited. This really gives the responsibilities and requirements for auditors to perform the audit, but it also talks about the need for an auditee to get this audit as well. If you see there in the second bullet, I've kind of broke that one out a little bit. For those of you that are not aware, the single audit costs are allowable to your federal programs. So if you have a single audit, I would work with your auditor to determine the portion of the bill that relates to the single audit. And if you have multiple programs within your single audit, have them break that out too, so you can appropriately charge those costs to that grant. That kind of brings me to the end of the uniform guidance discussion. And like I said, the uniform guidance is really overall rules, regulations, principles as it relates to federal awards. Now I want to give you a couple of tools that are going to be about specific program compliance. So the first one here, grant agreements. So as you all know, if you've received federal awards, there's going to be a grant agreement. And the uniform guidance does define a grant agreement as a legal instrument between the federal entity and the non-federal entity. So as a suggestion with the grant agreement, I would suggest you read the grant agreement very closely. I would look for different things in there considering spending rules, allowable costs and unallowable costs, because oftentimes they will mention things in the grant agreement for that. Budgets, sometimes they talk about budgeting. There may be information there about the types of reporting, the timing of reporting. There could be information in there about the period of performance when you could spend this funding. So if you have questions though after reading that grant agreement, this is a good time to contact the federal awarding agency. You want to make sure that you have the same understanding as what the federal government does on the expectations. Because here's the big thing with the grant agreement. For those of you who've been through a single audit, you've probably seen this happen. When the auditors come in to perform your single audit and they've finally selected the federal programs that they're going to be testing as part of your single audit, they're going to ask you for the grant agreement. And guess what they're doing with that grant agreement? They are taking that grant agreement, looking for the same things that I just told you about, and they're going to include those as testing items to see if you're complying with them. So that's why I say it's really important to read those grant agreements, because we do, and we test against them. So hopefully that's just a little bit of insight on where we come up with some of the questions for the single audit. Another tool, the OMB compliance supplement. I'm not sure how many in the room today have heard of the OMB compliance supplement because it really is an auditor tool. It's issued by the Federal Office of Management and Budget. It usually comes out in the late spring or early summer. And what that does is it really gives a basic background of each federal grant and suggested auditing procedures that the auditors are supposed to follow. Now, I said it is for most grants. There actually are some grants that are not included in the compliance supplement, but the vast majority of them are. And that really is the starting point for the auditor. They go through that compliance supplement. It really shows what the feds want us to look at. Because that is something that brings me to a point. I just wanted to make this clear. When the single audit is done by your auditor, they are following the rules, the regulations that are established by the federal government. These are not rules that are set up by your auditor, by the auditor's office, or by the state. They're federal compliance rules. And your auditor is bound by the uniform guidance to report on material instances of non-compliance, lack of internal controls, or anything that we're talking about today. So I want you to keep that in mind because I think some of the single audits as of recently that are happening now or going forward because of this additional ARPA money, COVID money, there's a lot of stuff sent out and maybe not a lot of guidance. So you might see some additional findings in these single audits. And just keep in mind, don't beat us up too badly. These really are the Fed's rules. And we're just trying to, I guess, help them make sure there's compliance with those rules. But back to the compliance supplement, sorry about that. They're useful for you guys. So it helps us, but I would recommend you go out and read the compliance supplement for your grants that you have too. No matter whether they're going to be part of your single audit or you just want to make sure you're complying with the rules of your grant. This is going to give you really the insight from that federal awarding agency of what they think is important on that grant. So don't do it just because of a single audit. Please take a look at that compliance supplement. I think you'll find it very useful in making sure you're in compliance with your grant. So the next section, let's talk just a little bit about ARPA. Not much, just a little bit. So ARPA was signed into law by President Biden on March 11th of 21. And I really just want to point out these different bullets here because I think it's surprising to a lot of people how much money the state of North Dakota received as part of this. $3.2 billion was allocated to our state. Of that, $1.82 billion went to payments to individuals and grants to specific entities, and another $242 million directly to cities and counties. The legislature is also going to get its hands in this. They're going to allocate another approximately $1 billion in fiscal relief funds and another $113 million in capital project funds. Another poll that I did out at the Auditor Treasurer Conference in Dickinson just was to check how many counties had received their second payment of ARPA, and I think most of you had. So you guys are well on your way into this program. So state and local recovery funds, SLRF. This was really designed, I guess, to build and expand on the support for CRF funds. CRF meaning Coronavirus Relief Funds or the CARES Act. They published an interim final rule to give some clarification on how these funds could be spent. And that was in May of 21. And as the title suggests, interim, there was a final rule released in January of 22. And then finally, the final rule took effect April 1st of 22. We have suggested to our clients they should take a look at the final rule just to kind of get familiar with it as they can. Now, take caution, it is a lengthy document, so you might want to pick out what you want to read. And also look at some of the FAQs on the Treasury's website. Those are also going to give you some good information related to the SLRF funds. So with all federal funds, there's allowable uses and there's unallowable uses. So let's start with the allowable uses. If you look in the final rule, there are 4 key areas that they say are allowable uses for SLRF funds. One is to respond to the negative impacts of the pandemic, provide premium pay for essential workers, replace lost public sector revenue, and lastly, invest in water and sewer and broadband projects. So as you can see, the allowable uses for SLRF are fairly broad. And there are some other little things that they've built into this. One of the things that has been kind of handy for our state If you've received under $10 million, you can really use this as general government services. If you exceed $10 million, you got to be more careful in fitting those different expenditures into these sections. So what are some of the unallowable uses? The final rule specifically talks about some of these different areas as well. So they don't want you depositing funds into a pension fund. They don't want you offsetting a reduction in tax revenue if some state law or regulation changed. They don't want you paying for debt service payments or replenishing your financial reserves. And they also give some general restrictions. The first one there, if it contravenes the statutory purpose of ARPA, I pretty much took that to mean if your project is going to possibly increase the spread of COVID-19, when really the purpose of ARPA is to help reduce it, you might have an issue with allowability. They also want you complying with your conflict of interest requirements or any ethical requirements you have, and also complying with federal, state, and local laws if they apply. House Bill 1505. So our office has received some different questions about this House bill. So what is House Bill 1505? It was first off passed in the 2021 special session. $317 million was allocated from the federal state fiscal recovery fund, and the distributions are go to counties and townships, and they must be for road and bridge projects. So some of the questions I guess that we had was really concerning how this money is going to get reported primarily on the CFA. So does the county put this money on their CFA? Do the townships put this money on their CFA? Because what happens in our state, the township distribution was going through the counties, because that is basically how the treasurer's office does their distributions. So we were trying to figure out, are the townships subrecipients of the counties? So what did we do? So we reached out to the federal government, some of our contacts that we have at the federal level. We reached out to some of the state agencies that are dealing specifically with this House bill. We worked internally with our agency division and our political subdivision to look into this question. And as we dug a little farther, we did find a FAQ that basically answered the question. So what was the FAQ? So it's FAQ number 13.14. And I did provide a link to those FAQs. So if you've never read through that, I would highly suggest doing that. But the FAQ question asks the question, do recipients need to report subrecipient information for the revenue lost eligible use category? So I'll stop there. The first thing we had to do is figure out when the state allocated that money from the fiscal recovery fund, under what category did they issue that money from? And based on our discussions with the state agencies, what we discovered was it was under the revenue loss eligible use category. So as a result of that, when you look at the answer, no, recipients' use of revenue loss funds does not give rise to subrecipient relationships. The amounts received under House Bill 1505 will not be included on your CFA. So hopefully, if all this is depressing to you today, this is the one bright spot that I can give you, because this should make it easier for you all. So single audit testing. What is some of this going to look like if you end up having a single audit? So here you can see again, if that $750,000 threshold is met, our office will typically perform that single audit during your financial statement audit. And I'm going to go through now some of the common testing areas with you, give you some background and insight on these things, and hopefully answer a couple of questions for you. But the first one there, this is a big one. This really is. Document and test internal controls related to the federal program. You know, auditors can be a pain in the neck. And when they come in and start talking about internal controls and are they documented and where are your policies and procedures, they get more annoying, I think. But I wanted to reassure you, there is a reason we do that. The Uniform Guidance 200.514 requires the auditors to document and test your internal controls so we can support a low risk of material noncompliance. So that really is a key, and we look for that. So we're going to ask you questions, and we're going to require to see some of that information. And I'm going to give you some more specific examples in a little bit, but that is a big one. Once we've got that part of the process done, we also have to determine your direct and material compliance requirements. And today I've listed a few, and these are going to be the typical ones if we're doing an ARPA program. There could be others, especially if you have different grants, but today I'm more so just trying to keep it within the realms of ARPA here. One of the things that is almost certainly going to be performed is a test of expenditures to help address the allowable cost requirement. So what do we do here? So we're going to ask you some different questions. We're going to assess risk. As we did earlier, we're going to look at the types of expenditures you have, and we're going to determine if we need to do a sample size of 25, 40, or 60 items. And again, those risk factors are very similar to what we mentioned before. How well are your controls working? So now that we've documented your internal control process, we have a better understanding of what our control risk is for your audit. And then we're going to look at, turnover in personnel, training of knowledgeable individuals, just some different factors. And once we take those into account, that will determine your sample size. And typically, what are we going to need for support? We're going to need invoices. We're probably going to look for proof of approval by the board. Those are going to be typical things that we'll be looking at for your tests of expenditures and the support. The next compliance area is going to be compliance with your period of performance. So ARPA has a pretty wide window here. They gave you an obligation period of March 3rd, 2021, all the way through December 31st, 2024. And then they gave you an additional 2 years to actually pay for those obligations. So that is, it's a big range. What are we doing? What are the auditors doing when they're coming in and looking at period of performance? Well, because the end of the period hasn't gotten here yet, all they're really going to be looking for is to make sure that you don't have expenditures, popping in before that period begins. And they're going to probably scan your general ledger. They'll probably do a test, or they could do that test in conjunction with your test of expenditures noted above, and see if anything happened that was prior to March 3rd of 2021. Another area we've kind of talked about a little bit already, test of purchases for compliance with procurement requirements. So right there is uniform guidance related to procurement for you entities. I would suggest reading through those. There's a lot of information in there. And again, I would also strongly encourage you to have documented policies and procedures as it relates to procurement for your grants, because that is something that we're going to be looking at to help ensure that you're complying with what you've decided to do. Another section of testing that we're going to do is test of reports. So the guidance lays out 3 reports for ARPA, fairly specific. The interim report, which is just an initial overview and a status of your funding. There's a project expenditure report, which gives financial data, information on expenditures, and also information on contracts over 50,000. And then lastly, there's a recovery plan performance report. So this is going to provide information on your recipients, but it's going to be for large recipients. And to my knowledge, I don't think we have anybody in the state that meets this criteria, so I'm not expecting to see any recovery plan performance reports. And then lastly, subrecipient monitoring. So this is going to be, if you have subrecipients and you indicate that on your CFA and you've talked to your auditors that yes, we've passed these money to these subrecipients, we're going to be looking at your monitoring activities and going through the different compliance areas with you on that. And I'm going to expand on that in a second. So what have we found with these audits? So internal control weaknesses, evidence of internal controls. So this really is a big one, and I think this takes just a little bit of extra explanation. We come in, we ask you, what are your controls for this or that, and you give us an explanation and it all sounds good. But if we can't see evidence that those controls are in place, then the auditors start asking more questions because they need to corroborate that those controls are in place before they can actually conclude that they're in place. So what do I mean? Give me an example, Mike. Okay, here's an example. So we come in and we say, what do you do to make sure this report, so we can take one of those status reports from the prior page, is complete and accurate? And your response is, well, so-and-so reviews that report, goes through all the amounts, adds it up before I submit it online. And I would say that's a fantastic control. That's exactly what you need to do. Now show me that she does it. If she doesn't initial off or do something on that report to indicate her review, that control sounds great, but we don't have evidence of it, and it may still be considered a weakness. If somebody is reviewing or looking at a spreadsheet or prepares a spreadsheet to check whatever it might be, your spending, your period of performance, whatever it might be, if they're doing other procedures to make sure there's compliance with the grant, have those documented and available for your auditor, because that really is what they're looking for. And if they can see that, you're going to fly right through the internal control section of that review. Another thing that I've tried to suggest to clients, which can be helpful, we can use the knowledge of individuals that are doing key transactions. We can use the training of those individuals to basically rely on them doing certain aspects of their job. So if you have people taking different federal courses or different training courses, make sure that you keep that listing, because there's a good chance your auditors would ask for it. I know I do from time to time. And also with internal controls, make sure you have your policies and procedures documented. This really is key. I just could be a broken record here. I could just talk about that all day. But having documented policies and procedures is so important, because not only is it a roadmap for you, because I've seen this happen in person. So that an entity receives a specific grant. It's somewhat of a unique grant, it's complicated, and this person knows everything about the grant. But then they quit. Guess what? There is nobody left at that entity that knows what's going on with that grant. And I tried to tell them, I said, if you have documented policies and procedures, at least you'll have a starting point. So if for no other reason, even if it's not for the auditors coming in, that's still a good reason to have documented policies and procedures. So what are some good policies to have, even if they're not necessarily federal related? We would definitely like to see procurement policies, and that will help you with your federal grants. Capital asset policies. If you don't have a capital asset policy, how do you know your useful life? How do you know how you're depreciating your asset? How do you know when you're going to capitalize something? So have those capital asset policies set up. A credit card policy, which I think someone prior to me has spoke up a little bit. Fraud policies, and also a GASB 54 policy relating to fund balance reporting. Try to have those in your back pocket, because those will make a difference for you and your audit report as well. Subrecipient monitoring. So this is a big section. Where to start? First thing, make sure you're determining the subrecipient versus the contractor. Making that determination properly is either going to make this section go okay, or it's going to make it go really poorly. Required elements of a subaward. So what is that? So if you have a subrecipient that you're giving money or passing money through to, you're required to have a subaward. And that CFR section talks about that subaward. And in there are some required elements that have to be included, such as the period of performance, the amount of the award, a project description, the assistance listing number. Those things need to be in there. And guess what? Your pesky auditor, they're probably going to be looking to make sure that those subawards have those required elements in there. So fair warning, we might take a peek at that. Also, for subrecipient monitoring, this is hanging some people up, and I would expect it to if you've never heard of training like this. But if you have subrecipients, the uniform guidance requires you to do a risk assessment of your subrecipients. And this risk assessment is really designed to help you determine the extent and timing of your monitoring procedures. So when you're doing that risk assessment for your subrecipients, what are some of the possible risks? Well, does this subrecipient have prior experience with similar awards? What are the results of their prior audits? Do they have new personnel or change systems? And also, what's the extent of the federal monitoring with this award? So really, as a pass-through entity, when you're considering these risks, if all of the answers to these questions are not so good, your monitoring procedures may need to be more extensive. Now, if they fly through that and everything looks fantastic, you might be able to back them down on your monitoring list a little bit. But that risk assessment is required by uniform guidance, and we do look for that risk assessment. So when you're going through those different things with subrecipient monitoring, I really encourage you to talk to your auditor if you have questions. Hopefully we can help you through that cumbersome process. The next one you see on the slide here is period of performance. That begins, March 3rd, 2020, as we said. We've seen some expenditures slip in prior to that. And the emphasis really there is you want to look at when those services were performed or incurred, not necessarily when you got the billing. So if you say you got a bill March 31st, and when you look at the bill, the services were actually performed in February. Some of our clients or entities have put those into their expenditures, but really since the services were rendered prior to the period, they wouldn't be included in that time frame. Reports. This is just kind of a heads up on the reports, I guess. We've had a couple of clients that filed their reports online just like everybody else did, but then when it came time to giving the auditors a copy of the report, they had trouble retrieving that. So just make sure you have a way to get those reports to your auditors if they ask them, and maintain support for those as well. Another quick thing on reports, it talks about in those reports obligations versus expenditures. There is a difference. They're not exactly the same thing. I mean, they can be the same amount, but they are not necessarily. So what's an obligation? Maybe a simple way to explain it. This is simple terms. This is one example. If you had a contract and you signed a contract for $1 million for an entity to do this work, and then say the end of the year comes around and you only spent $500,000 or paid $500,000 toward that contract. Well, your expense amount on the report's gonna be $500,000, but the obligation amount's gonna show $1 million. So there is a difference there. And if you got a pencil, you should write this down. 200.1 of the uniform guidance, that's where we talk about the definitions. It does give a definition of obligation. So I would encourage you to take a look at that if you're doing this reporting. So we're getting down to our last slides, and I'm sure you guys are all like, thank God, get this guy off the podium. So here we got, what are these? So we're really today talking about disaster grants for public assistance. These come into play if there's a presidential declaration of a major disaster or emergency. And FEMA awards these to state, local, and territorial governments. So through this program, they provide emergency measures and debris removal for right after the incident when it happens. And then they also provide funding to help mitigate, future problems as it relates to these disasters. So the project worksheet. This is kind of the main form, I guess, that the auditors are looking for when they're working on FEMA funds. The project worksheet, or better known as the PW, is FEMA Form 90-91. So what does the PW do? So it really details the project and the costs that are going to be claimed. It contains the information that's necessary for FEMA to either approve your project or not. And if FEMA does approve it, they're going to obligate the federal share of those costs to you. And the PW really is the official record and the scope of the work for the project. So when working on FEMA projects, what are some different things that you would weigh to make sure that the expenditures are allowable? So really the expenditures should be directly tied to the performance of the work. It should be adequately documented, and it should be net of any proceeds or salvage. So if you're, scrapping stuff, it's got to be net of those. It should also be net of any insurance proceeds. It should be consistent with your policies and procedures, and also necessary and reasonable to accomplish the work efficiently. Got a FEMA slide here because this is something that hangs everybody up once in a while. When do you put FEMA expenditures on your CFA? So I've got a couple of different examples here for you, but a county recognizes the expense on the CFA when the PW is approved and then the work is done. So example number one, if you have an approved PW and then the work is completed, the amounts go on your CFA, as it's invoiced or billed. Now, something that's a little interesting, if in this example, you do your work in 2020, but the PW is not approved until 2021, then you do not put those expenses on your CFA until 2021. As far as the township side goes, a county is going to recognize those expenses for a township project when they receive the supporting documentation from the township for those expenses. Coding of FEMA expenditures. So typically we see FEMA expenditures coded into the FEMA fund. Now, from time to time, you may incur expenditures, prior to you knowing that you're going to be reimbursed by FEMA for those amounts. And if that happens and then you discover, FEMA is going to cover these, we encourage you to do an adjusting entry to move those expenditures back into your FEMA fund. And I'm just a good news guy, so here we go. I've got one more little nugget for you today. President Biden, he signed the Consolidated Appropriations Act of 2022. And within that act, it actually increased the federal cost share to 90% for your FEMA projects if they fall within that time period of January 1, 2020 to December 31st, 2021. Now, some of you might be wondering, as this applies to my CFA, are we gonna have to go back and restate CFAs? No, thankfully not. It's not gonna be retroactively applied to your CFA. Instead, we'll put it on your current CFA and just have a footnote. So as promised, I've included some helpful links for you today to the compliance supplement, uniform guidance, final rule. Hopefully you guys find those interesting. That's what I've got.
Thanks so much, Mike. There were just a couple of questions online. Let me just pull them up here. Our auditor sent an engagement letter to provide full service lease service assistance to comply with GASB 87 lease implementation. They're thinking it's new accounting standards, and they said that the cost is high, and they wanted to make sure that that was required.
That may be a question I have to take a little closer peek at and ask a couple of extra questions to get the right answer to them.
Yeah.
So we'll mark that down and we'll get back to you.
Yeah, absolutely. And then we don't have a name associated with that question. So if you would like to just post an email that we could go ahead and get in touch with you, or a phone number, whatever works best for you. If you just want to send that over our way, we'll make sure and connect with you and answer your question. There was another question about a federal grant, and if it's awarded to different local governments. They're saying a separate entity is the fiscal agent who then invoices and receives the funds from those various entities. Who is responsible for reporting those as a federal expenditure on their CFA? The one fiscal agent or every separate entity passing those funds?
This is going to be another one. I don't want to misspeak. I don't know that I quite understand the fiscal agent part.
Yeah.
So again, I might ask some follow-up questions on that one to get them the correct answer.
Yeah, absolutely. So again, this was not posted with a name. So if you would care to just shoot us a message, an email, or give us a call, we'd love to connect with you one-on-one and talk through the specifics of your question. Another question is, where is the OMB compliance supplement resource available?
So if you look at that links page, there should be the link to the OMB compliance supplement. And also if you use Google, if you want to search the year of your compliance supplement, if you search 2021 OMB compliance supplement, it should pop up for you to where you can go in as a document and scan through that. And you can search if you're looking for compliance supplement and you're looking for a specific grant, you can search that document for your ALN number or the name of your grant, and it should pop up for you.
Wonderful. Another question is there a way to get a copy of the single audit presentation? And yes, this actually is already online. So if you go to our website and the very right-hand corner, you click on education and there's an audit summit dropdown. You can download this presentation from Mike and all other presenters for your convenience. There's another question about, can you send out all questions and answers to everyone? All of the questions are being published into the chat window, so you can review those questions regarding the answers. We will have that as part of the recordings, which will be posted within a couple of days here to our website, YouTube, and then links on Facebook and LinkedIn as well. It looks like there's no additional questions at this time, so we are going to take a quick break and then be back right at 1:30 for the audit report tour with John Worrell. Thanks so much.